Hey guys, I am Hemraj sir. I welcome you all to HK classes. Today our topic is evolution of banks in India. Here is my brief info. I am Hemraj Kablia, BE Mechanical, Post-Graduation Diploma Taxation Law, University topper, motivational speaker, good at public speaking and communication, and here are my interests. Okay, so let's begin. Here is a thought of the day. A journey of 1,000 miles start with a single step. It is by Confucius, who was a Chinese philosopher and is today also recognized as a great person. Okay, so try and apply this thought in your life. So evolution of banks in India up to the RBI nationalization. What are banks? Financial institutions which accept the deposits and grant loans. Is this a bank? Or performing the functions of Banking Regulation Act 1949? No, it does not explain all. So what does a bank mean? It must also include NI Act 1881 and RBI Act of 1935 provisions. It must affect it. Okay, about banks in India. In 1770s, Bank of Hindustan was established. It was the first bank established by Britishers in India. See, here the Hindustan is in name, Bank of Hindustan. It is same like Hindustan Unilever, but the owner of the bank was Britisher at that time of Bank of Hindustan, and today also Hindustan Unilever is owned by a foreigner. Same Allahabad Bank is was the first commercial bank of India. See the difference. The first British bank was Bank of Hindustan and Allahabad Bank was the first commercial bank of India. So keep this thing in mind. Then in 1926, Hilton Young Commission came. Okay, it recommended the need to establish central regulatory bank and define the functions of it. Hilton Young Commission was came because the banks were facing some of the problems at that time. Then in 1929 and 30, as we all know, the Great Depression has came. The Great Depression was the result of the First World War and also a collective effect of fall of the US market, US share market. All these commercial banks in India were also investing their money in some or other way to US share market of that time. Okay, so US got into a huge financial crisis during the Great Depression and it affected the whole world. It has a spillover effect. So RBI established in 1934. Why does the RBI establish? It was because of the Hilton Young Commission recommendation of Central Regulatory Bank. Okay, partly public and partly private. RBI when established only few percent or even less than 20 to 25% of share were with the government and larger part was with the private sector and it was headquartered at the Calcutta at the beginning. Reserve Bank of India. Okay, how government nationalized the RBI? The rigorous transfer of ownership was done because Hilton and Commission has propounded already that recommended that the central regulatory bank should be in the hands of a government. So transfer of ownership was needed. Purchased 90% of previously owned private shares till 1948. It was important because if this thing would not have been done, then the whole purpose of RBI would be nullified. Okay, so nationalization of RBI, the process was done and completed in 1949. So up to this moment, what we have done, we have centralized the banking system and RBI, the Central Regulatory Bank in 1949 was established in a or was nationalized in real sense. It was established in 1934 and till date means 1949 it was completely under the government's control, so it helped the government to affect the policy of Indian banking system and also it helped the government of India to manage the banks properly in the future. Okay, so these are the ways by which the RBI was nationalized and we have seen the banking system in India and the history and the evolution of banks. In next lecture, I will be discussing about how the types of banks get evolved and how the banks are affecting the Indian banking system. Okay, thank you all. Please, Facebook link is there. I have pasted. So follow me on Facebook and also like and comment. Subscribe to my channel HK Classes. Here Hemraj Kablia signing off.